Good morning. My name is Gert Allen. I am the private lead for PwC Africa. And a warm welcome to everyone joining us today for the kickoff of our 2021 Private Company Webinar Series, which we are very excited about. As 2021 unfolds, the business landscape remains dominated by COVID-19 and the global response to its effects. But the pandemic will pass, and its most lasting effect may be to accelerate a range of disruptions that were here before its onset, and that will certainly continue long after it has subsided. But what are the most important ongoing challenges or issues that private and family business are facing this year, and their long-term impact on business continuity? During this series, we will focus on the issues we think are most important for you to consider in 2021. You can look forward to webinars on digital transformation, cybersecurity, corporate governance, and ESG, environmental and social governance, as well as the launch of the Africa Cut of PwC's Family Business Survey. Today we'll set the scene for the rest of our series with an economic outlook for the year ahead, and it's my pleasure to welcome Lulu Krugel, PwC's Chief Economist and a partner in our strategy and team. Lulu and her team assist clients in understanding how the external economic and socio-economic environment might impact their businesses and to assist in developing strategies for response to those. She is a regular commentator in the media, a frequent presenter at national and international conferences, and I'm quite sure you will enjoy today's session with her. There will be time for questions at the end of Lulu's presentation, but you are most welcome to post any questions you may have in the chat box in the bottom right corner of your screen at any time during the session. If you do, please use the everyone, as we'd like to encourage an interactive session. With that, over to you, Lulu.
Thank you very much, Gert. Good morning, everyone, and thank you so much for joining us on this Friday morning. As Gert has said, please do leave your questions in the chat box. You will see that there's an option for all attendees, if you're okay with that. Otherwise, you can also direct it towards me, but I think most of you would be interested in knowing where the questions are coming from. I will try and keep an eye on them as they come through, because if there's a specific question about a specific area that I'm presenting, I'm going to try and address those. Otherwise, there will be time at the end of the session as well. So it's your preference how you want to do it. So as Gert has said, and I have control of the slides. For some reason, I don't. There we go. Thank you. As Gert has said, yeah, the economic landscape has been dominated by COVID-19, and in a South African context, we had a couple of issues that we had to deal with beforehand. So, whenever we look at actually how strong and how quickly the economy will come back from that, we need to keep in mind some of those things that we were dealing with before COVID, actually. And we need to remember that those are still there. They haven't gone away. I think over the last week, for example, most of us had to deal with the impact of load shedding. And over and above probably COVID-19 that we have to deal with at the moment, in my opinion, that is the biggest impact on the business environment currently. We also know that we still need to deal with, do we have the right skills, etc. So a lot of those things were there. And you know, from a global context as well, and Gert actually started the conversation with touching on this. There were also a couple of drivers that we had to deal with, and that is still having an impact on the landscape in which we operate. And I actually quickly want to go through these because I think it's extremely important. Depending on where you are, this has a different impact on your business. If you look, for example, at age, or if you look at disruption. So the impact on the businesses are slightly different, but these are global trends that we've seen, and it's having an impact on how our governments are dealing with certain issues, how we are dealing with it from a business perspective, how we are dealing with it from a personal perspective, you know, being consumers and being citizens, etc. So if you would give me the time, let me quickly go through those and pull it through specifically to the private businesses and family-owned businesses that that most of us or all of us operate in, and how those impact that particular environment. So if we start with asymmetry, we've seen this gap between rich and poor actually getting bigger over the last couple of years, and that has actually led to quite a few of the other trends that we are seeing globally. If you look at polarization, if you look at trust, asymmetry, and the fact that that gap between rich and poor is becoming bigger has had an impact on how people respond and how they make their decisions. Be that as it may, if we look at the South African environment and unemployment, we had really high unemployment levels pre-COVID already. I think we were in the top 5 most of the time, unfortunately, in terms of having the highest unemployment levels. And on the back of COVID-19, although we are pleasantly surprised by the numbers that we are seeing, we still realize that this is by far one of the biggest issues that we need to deal with. Unemployment is currently sitting at 32%. Some economists, myself included, were forecasting it to go to 34 plus percent by the time we have this conversation. So we're thankful that we're currently at 32%, but there's a couple of numbers that and things behind those numbers that we need to understand. First of all, you know, there are people that are discouraged to look for jobs, and going into the unemployment numbers a little bit later. So they've given up, and those are a couple of million. I think it's currently sitting at around 2.5 million. We've seen the labor market actually contracting, and for me, that is a very interesting trend, and I'll speak about that a little bit later. But bottom line is, unemployment is probably socially and economically one of the biggest concerns that we need to deal with. And under COVID-19, although I think every single one of us in this call has been impacted by in some way or another, we've seen the impact on lower income workers, the informal sector, lower skilled workers, to be disproportionate. You know, if you look at job losses, for example, those parts of the population have been harder hit than the rest of us. And very few of them actually have some kind of buffer in place that can actually help them through this period of time. We've also seen small businesses being negatively impacted, failure of small businesses, sectors being differently impacted, and I will spend a bit of time on that later as well. So yeah, we've seen the gap between the working rich and poor getting bigger, but also as a result of COVID, we've seen the impact disproportionately fall on semi-skilled and unskilled workers and on the informal sector. The good news is that we have gotten back some of those jobs, but at the end of 2019, we were still about 1.4 million jobs less than at the end of 2020 than we were at the end of 2019. We had at the end of 2019. In terms of disruption, very interesting one within the South African context and also on the continent. There's two big things there that I want to spend a couple of minutes on. The first is the impact of technology. And I think if there's one thing that we've seen is that we are able to actually take up technology a lot faster than we thought we would be able to. Yesterday afternoon, we had a conversation with our banking clients, and we were chatting about the impact of banking on digital. And one of the things that came through, digital banking, sorry. And one of the things that came through very strongly is that, we've actually globally and locally taken on digital payments and digital technologies at quite a pace during COVID. A lot of the branches were closed. And if I just think about my own parents, for argument's sake, especially my mother, funnily enough, my father has taken to technology, but my mum has still been a little bit, I prefer to look people in the eye. So, if we look at banking, for example, people have taken on that new technologies because they had to. We've seen some reversion back to, face-to-face interactions. If we look at stores, for example, on the retail side, some people preferring to go to stores, even if it's just an outing, even if it's just about, the social impact. So I think we will always have that mix, but to a very large extent, South Africans have taken on digital options for retail, for shopping, etc. And those of us that are lucky enough to actually be able to work from home seamlessly, we've seen that and an uptake of that to a large extent. Sorry. We've also seen that a lot of South Africans have also taken to using online platforms to do their everyday businesses, and businesses moving on to those platforms at quite a rate. In fact, I think at the end of 2019, we always do a survey, or at the end of every year, we always do a survey to look at the Black Friday impact. And at the end of 2019, only 5% of our retail was in fact happening online, and that has moved to 20-30+% currently. But what we do see is that, again, it also links with that asymmetry. Online schooling, and we've seen specifically that richer households have been able to take that on. Also, if you look even at the retail side of the equation, it's typically richer households that can actually do that. So it's extremely important for us moving into this digital age to look at how we are actually going to disseminate that. I think on the payment side, we've been not too bad actually, and giving people access to financial services, but in other areas we still need to look at how we do that. If we do look at the other big thing, it's around ESG, or what we call ESG, environmental, social, and governance impacts. And we've seen a very big move of our customers, and us as consumers and customers as well, becoming more socially conscious, asking questions about where products are coming from, wanting to know how businesses impact society. And in South Africa, one of the industries, for example, where we've seen a big impact is on the mining industry in terms of their operations. So how do they impact those companies, those environments where they operate? Another factor, sorry, I have a bit of a frog in my throat this morning, so I'm going to have a sip of water every now and again. Another industry where we've seen significant impacts is on the agricultural industry. I know a lot of you that's on the call this morning, there's already a focus from you to do a lot in the communities where you operate. And we've seen consumers actually wanting to know that and actually asking questions around that. The third one, age. It's interesting how we look at this. For a country like South Africa and for a lot of the continent and, quite a few of the developing countries out there, we have a young population. And we mostly see this as putting pressure on us in terms of being able to create more jobs. And that is true. That is, in fact, the case. But it was also interesting speaking to some economists that are in, countries that are more developed, like the OECD, economists that come from the World Bank, etc. And in those countries, they see that the age of the population is actually counting against them. They're asking themselves the question whether or not they will have enough people to actually do the work. They want to know if they will have enough taxpayers. So for us, I think we need to realize that this is a big challenge, as I already spoke about. But it can also be a benefit if we use it in the right way. It can also be a benefit if we are able to create enough jobs. On top of that, the last point that you see there is the intergenerational debate, and it's an interesting one that has really taken hold over the last couple of years. Who's going to pay back the debt that we are sitting with? In South Africa, we know that we have had growing debt levels, and I will spend a bit of time on that later. But are we leaving the younger population with enormous amounts of debt that they need to pay back? And that's not only a local problem, it's a global thing that we need to deal with. Polarization, also very interesting to see how this plays out. There's some people that have very strong political views around it. In some instances, there are just the economic realities being created as a result of polarization. Things like Brexit, for example. Yeah, it's happened. So now we need to deal with it. The UK is one of our largest trading partners. And yeah, I suppose to some extent, maybe COVID came and overtook all of that. But it's moved a little bit to the back of the list of things that we are concerned about. I've never seen so much interest in US politics than I've seen over the last couple of years. And I think it's as a result of the strong feelings that people have from a political perspective, being it either left or right leaning. Yeah, I think it has caught some of us economists unawares, myself included. A couple of years ago, I would have said, but, why would anybody vote for Brexit? Or, I can't see Trump in power. And as we started to understand why people make those decisions, it doesn't necessarily mean that we agree with the decisions that they've made. But if we get a sense of why people make those decisions, it has an impact on how we respond to that. And under COVID-19, we've seen some very interesting trends. A lot of companies just said, but I have issues with my supply chain. I was dependent on one company to actually provide a product to me, and they're not able to do that under COVID-19. So, or if I was importing products if we were importing products from abroad, what was the impact of that, and supply chains being negatively impacted by COVID? I think to a large extent we've been able to actually sort that out, but it's taken a couple of months, and we've seen companies diversifying their supply chains and saying that we actually need to get supply from more than one player in the market. It's interesting because I thought it would have more of an impact on China. Perhaps that is still to come, but we'll chat about that soon. And then the last one, and a big one, I think for you as privately owned and family businesses, is trust. A lot of consumers looking at your businesses have the view that because you are invested yourself, they can trust the organization more, they can trust what you do more. But I think the challenge for you is making sure that you communicate that. that you communicate how you are contributing, what you are doing, and to help build that trust. On top of the trust, of course, in organizations, there's the trust in institutions. And yeah, we've been through the ringer in a South African context, and we're seeing the impact of corruption with the Zondo Commission that is still ongoing. And we've heard about some of the things and how people try to benefit from COVID-19. It is not a uniquely South African thing. It is something that happens everywhere. But it doesn't mean that we need to keep quiet and accept what is coming our way. So we should ask questions, and we should ask, it's our right as citizens to say that we are not happy with the way that things are going. But I think for you as businesses, there's that perception that because you are invested personally so much more than is the case maybe with public companies, that there's a higher degree of trust, but also it's about communicating that to consumers and to everybody out there that's using your product. If we look at the rate of recovery over the next couple of years, I was actually contemplating whether we should talk about a U and a W-shaped recovery at all, but we might still see some economies there that have been able to really manage the number of people that are infected by COVID. If we look at New Zealand and Australia, etc., they might end up with a U or a W-shaped scenario at the end of the day. China is telling us, and the numbers seem to be telling us, that they are back to where they were pre-COVID. And for me, well, actually, it's slightly better if you look at last year's growth numbers. For me, it's a bit of a surprise, because I thought that the downturn that we see in other parts of the rest of the world, in particular in Europe and Africa, etc., will have an impact on the Chinese economy and their manufacturing demand. We've seen the opposite, definitely, if you look at mining products and also in the exports of agricultural products. There's been strong demand for certain of the products that we export. Although I do know that certain parts of the agricultural industry, if we look at the wine industry, for example, has been through the ringer. So it's been a mixed bag for a lot of those industries. Be that as it may, if we do look at China, I think, depending on who you are they the biggest or the second biggest economy, doesn't matter. But one of the biggest economies are telling us that they are back in terms of demand of where they were pre-COVID. If that stays that way, and if they later on perhaps see the impact of people moving their supply chains, because we spoke about that, but it's not something that happens overnight, it's a process. Or if we see an impact on the demand for their goods globally, that will play a role. What we've been hearing is that their own demand, if you look at their own customer base, has been negatively impacted initially and then, bounced back. So some good news there. The US, of course, also telling us that they will be back at their normal levels of output by the middle of this year. For South Africa, for a lot of Europe, if we look at countries such as Germany, for argument's sake, we're talking about an L-shaped recovery. We think that it will take 2-3 years for us to actually get back to where we were pre-COVID. And in the case of South Africa, as I said, it's not necessarily a place where we want to be. Combined with all of that, something that global policymakers and we also need to deal with is the fact that the economy has been hit differently by COVID. It's quite different from the 2008 financial crisis. When that happened, of course, it started with the insurers and the banks and the financial system, but it permeated through the whole economy. And at the end of the day, everybody was more or less impacted in the same way. Due to lockdowns, we've seen very, very different pictures and impacts from different parts of the economy. And it's also made it difficult for government to actually intervene. And on the next slide, I show you some of that. We've been keeping track of some of the high frequency data as it comes out to give us a bit of an overview of where the economy is, where specific industries are, how the consumer's health is looking, how the public sector is looking. And I think there's a lot of numbers there. You don't have to take all of that in. We are going to distribute these slides afterwards, but still, what I would like you to see is the greens and the reds and the yellows, and the fact that we are sitting with very mixed pictures in certain sectors. If we look at exports for argument's sake, you know, the export industry, sorry, and maybe just if you want to compare the numbers, we're comparing it with the same month in the previous year. So if we're looking at exports in January 2021, we're comparing it to January 2020. If we look at November 2020, we're comparing it to November 2019, etc. So of course, when we had that lockdown, the heavy lockdown in April, the hard lockdown, that was negatively affecting most industries across the board. But exports have been doing really, really well over the last couple of months. In fact, we had a good month in January last year with 13.5% growth. And on top of that, we're still seeing growth of around 8.8%. And it's been driven mostly by the mining and parts of the agricultural sector. If there are anybody on the call this morning from the citrus industries, that has played a significant role. What concerns me, however, if I speak to players in the agricultural industry and in the mining industry, they are wary of actually expanding production and growing their demand as a result of a lot of the uncertainties that we're seeing. Uncertainties in terms of whether the demand will be there, but more importantly, uncertainties around whether or not the regulation will support them and where the regulation will be going. It comes through very clearly if you look at mining production, for example. Mining production, in spite of the fact that the sales is up, production is down, and we don't necessarily see people sinking new shafts, etc. Restaurants, coffee shops, catering sales, tourist accommodation, those two, between the two of them, probably giving us a pretty good picture of what is happening with the tourists in a South African context. And about half of what we get from the tourism industry in terms of revenue comes from foreign tourists. And that, I think if you look at tourism accommodation, that comes through. Another factor that comes through is that people might have made the decision to rather stay home and not go to the touristy places. There are some of that. But I think probably a bigger factor is the fact that people are or don't have money, or they have deferred some of their decisions because they're not sure where the economy will be going. So if you look at restaurants, coffee shops, catering sales, tourism, lots of red still there. Probably the industry that's been most negatively impacted by what we're seeing. And those of you that are in the liquor industry would have seen the impact of that, the liquor sales on the restaurant industry. Just quickly, the one that I forgot that I wanted to focus on as well is new vehicle sales. So it gives us about a view of the industry, but it also gives us very important insight into the consumer. And yeah, if we compare the January number, for example, January this year with January last year, January last year was already down. So it tells us a story that, the economy was already not in a great place. We're still about 14% down in terms of new vehicle sales from there. Again, because people either are waiting, they're buying down, because this is revenue, by the way. They're buying down, they're buying cheaper cars or smaller cars. I know in our household, we've been seriously asking ourselves, do we really need 2 cars? And there was a period last year where we actually, just used 1 car and then bought a significantly smaller second car. And I'm pretty sure we're not the only ones that are looking at that. So buying down or completely moving their buying decisions out because of the salary impacts that they've seen, or because they're worried about where the economy will be going. Be that as it may, as I said, mixed bag and some green shoots that we are seeing if we look at exports, if we look at mining, for example. And then the last one that I want to focus on this page is government revenue. So significantly down still on where we hoped it would be pre-COVID, before we knew anything about COVID. But surprisingly, about 100 billion more being collected in terms of revenue than what we anticipated in October of this year. So if you compare the January numbers, you will see that it's down on the January 2020 numbers, but it's less down than what I think a lot of economists thought. And that was good news for most of us from a personal income tax perspective. And there's some good news also if you look at the potential reduction in company taxes that we're talking about. We simply could not afford, from an economic perspective, to keep on increasing taxes. We got to a point even before COVID where the increase in tax revenue simply did not translate, or the increase in tax rates did not translate to the same level of increase in revenues. Just to spend a bit of time on the health of government expenditure. Yeah, as I said, in October, we were anticipating close to a 16% deficit on the budget. We're sitting around 14% now. It's still shockingly high. Let's make no mistake about that. We want it to be closer to the 3% level. And yeah, this is unfortunately something that we've seen again globally, but in a South African context, given the relative small size of our tax base, this has had an impact. But it's looking better than we anticipated. So good news there. On the expenditure side, if you took the interest payments out and we just look at main government expenditure, there's the expenditure line, the yellow one, and the revenue being the red line. And you can see there in the global financial crisis that these two crossed. And we have not been able to actually get them back to a level where our revenue exceeds our expenditure, and we can start to chip away on that number, and perhaps even move into a surplus on the budget like we had in the early 2000s. So there's a lot that government has put forward in their expenditure plans that need to go right, actually. And yeah, we will be watching that. Most importantly, being what happens with government revenues and what will happen with SOEs. If we look at the debt numbers, again, that was the October forecast, October last year. This is where we were in February. The first time in a very long time that we were able to revise these numbers downwards. They still don't look great. I'm not going to lie to you. We are going to see an increase in those numbers, but the good news is it is down from where we thought it would be, and it's down because our forecasts and the actuals actually look better than what we forecasted. If we look at the GDP numbers, for argument's sake, well, I think it's probably one of the times that we've seen the biggest range in those numbers. Then I probably can remember when I became an economist about 20 years ago, a little bit more than 20 years ago. So this is really, if we look at GDP forecast for this year, our own forecast ranging between 0.9 up to 6.1%. 3.5% being the baseline. It's very close to what the SARB said yesterday. It's quite close to what National Treasury is also expecting. But be that as it may, we if we look at other forecasters as well, these are similar ranges. So, you know, some people sitting with their base case close to 0%, other people with a base case in the region of 9%. So very significant differences, and there's a lot of factors that can influence that, and we will look at that. So last year we ended up with a contraction of 7%. 2019 basically flat growth, and for 6 years prior to that our growth has been slower than the population growth. So on a per capita basis we've been becoming poorer. GDP, not the only factor that we should look at, and I think that is something that a lot of economists are having conversations about. But if we look at unemployment levels, poverty rates, etc., we're seeing that that picture is not necessarily where we want to be for South Africa. So why do we say an L-shaped scenario in terms of recovery? If we take that baseline scenario that we have there, it looks good. But given the size of the contraction that we saw last year and our ability to actually you know, implement a lot of changes that we need to, we think that it will definitely have a negative impact on our ability to get back to where we were pre-COVID, which is not something we should strive for, and we think it will take at least 3 years. There's a comment that came through from Lionel. The impact of the pandemic, the growing discontent with the governing party, the slow growth of the economy, government's inability to reverse the declining tide and increase debt. When are we likely to see the bottom of the decline? If we have not reached that already, and will joblessness and poverty continue to rise? What are the signs that point to a recovery or turnaround? That's a great question, Lionel, and I think that's why we're saying 3+ years for us to get back to where we were, because we had quite a few challenges. And my last slide, actually, I will look at some of those challenges that we've had with COVID. But yeah, to speak to part of the question that you've asked there, if we look at unemployment. So GDP, we're talking 3 years. Unemployment, if we don't change the way in which we are doing things, unfortunately, it will take, you know, 10 years plus for us to get back to the same level of unemployment that we had pre-COVID. And that is because we have 500 to 600 people on average joining the job market. We had 1.4 million jobs less. Last year, as I said, I'm watching these unemployment numbers from Stats SA, and I think economists should be doing that in any event. It is the most comprehensive survey that we have. But last year's numbers, for a range of reasons, and I cannot fault Stats SA because they've really thought about the interpretation of the numbers, and they've done what everybody else has done. But we've seen a drop in the labor force, and that means that new people joining the labor market have held off on that for some reason. They've decided that it's maybe not worthwhile for them to look for a job right now because they're not going to get one. So that not being something that I think is going to be a continuous trend, because that would mean that our population growth is slowing, and we don't see signs of that at the moment. Be that as it may, we think that labor people will start to move back into the labor force this year. And in our baseline and upside scenario, I don't even want to go to the downside. But if we don't change the way in which we are creating jobs, we will not be able to slow or to create jobs fast enough for the number of people that move into the labor market. And that has been the trend over the last couple of years. And unfortunately, COVID has set us back about 1.4 million jobs. And if you look at the CEO survey from PwC that came out last week, we see that that is the major worry for CEOs in South Africa. So Lionel, I think in terms, if you take GDP as a measurement, we're over the worst of it and the economy is starting to grow, but it's going to take us another 3 years to get back to where we were before COVID. If we look at unemployment, we really have to change the way in which we do things. And if you look at that, we kind of probably at the worst at the moment. and we're starting to work back from there. If we don't change the way in which we're doing things and we get to that downside scenario, then we can still see a rise in unemployment to come. So what factors influenced our decision? There were quite a few of them. Eskom load shedding being one. The size of the fiscal interventions from government, and there you asking about what are the signs that point to recovery or turnaround. So I think one of the key things would be the rate at which we are able to roll out the vaccines, and that plays a significant role in our lockdown scenarios. If you looked at our forecast for last year, even under the same lockdown scenarios, if you look at level 3 or level 2, for argument's sake, we had significantly worse forecasts. We think that businesses are able to deal with it a lot better now, and that government will also be less strict. In particular, if you look at the retail sector, I don't know what they will do with alcohol, though. That's a different debate. But allowing us to buy online, etc. So what is playing a significant role is our ability to actually roll out those fiscal interventions. And we said there that, yes, we've put those plans forward by government, but if we look at history, we have not been able to meet the targets that we set for ourselves every year. So we were, I would say, I won't say conservative, but we looked at the past, and normally we are able to implement about 50% of what we've put forward for a particular year, etc. So you will see that in the fiscal interventions. Monetary policy, on the other hand, we have had more room than a lot of other countries. In terms of the TERS payments, for now, you will see that we don't have a positive impact there, because we're not sure how those numbers will pan out. But there will be some positive impact from the TERS scheme being extended. The question is what happens after that. The other thing, load shedding, and as I said, you will see in our last slide that we believe if we can get past COVID and if we get the vaccines rolled out, this is our biggest problem, and it's been there for some time. And it has negatively contributed around 2% to economic growth even before COVID. So in our base case scenario, we see that, sorry, that's the one. We see that we probably will have enough people to get herd immunity by middle of next year. That is if we don't have new variants. Although the people that know are telling me, even if there's new variants, the vaccines that are out there will still work and will still help. What I have on this slide is maybe just a different way to look at the growth numbers. So we unpacked it a little bit, looked at the negative impact on certain sectors, the positive impact that we still expect to see this year, but how far that sector will be down, we think, and according to our modeling, by the end of this year from the 2019 levels. So if you look at accommodation, for example, and take that as a tourism or as a proxy for tourism, still being the worst impacted this year. Lastly, just to wrap up, and Lionel, I think that would also link to some of the questions that you've asked. So we did a bit of a calculation. We said that we obviously know that we cannot, be happy with a 1.5% economic growth if COVID disappears over the next 2 years and we have that under control, because that's kind of the long-term growth, if everything goes well, that we've had over the last couple of years. And this is according to the SARB. It's some researchers at UCT. We'll have to look after COVID and see if that number is, I'm hoping, not worse than we previously had. But yeah, that's kind of the long-term growth that we are looking at is around the 1.5% mark. So how do we move the direction? What kind of things do we need to look at? Obviously, we couldn't monetize every single factor out there that can positively contribute to GDP growth, but we think that these are the most important. FDI, Starting a business, ease of starting a business. We thought it was a good indicator of the entrepreneurial activity and the ability to actually register a business and the speed at which it happens, etc. Electricity supply, digitalization, private sector investment, the availability of local content and increasing local content, and then skills, which Stanford has this index that they call knowledge capital. So if we look at all of this, for me the interesting thing is the what are your assumptions? Sorry, I'll get to that now when we will recover from the impact of load shedding. I will get to that now, Vianney. Yeah, and it's not necessarily again a pretty picture. I'm at the point where I think we should be stopping having conversations about Eskom, and it should be about electricity supply and the availability of electricity. And the other options that are available to us now as well should definitely be part of that discussion. I think as is the case with a lot of South Africans, I'm frustrated with the fact that we haven't seen a lot of progress being made at Eskom. We've 2-3 years ago heard that Eskom will be split into 3. We haven't heard a lot about that. So I think we should not just face in that direction and have a view about Eskom. We should really think about electricity supply. Anyway, so that, in our opinion, is the most important thing that we need to fix, followed by our skills and having the right skills and private sector investment. And you see here that we built in a 1% change every year. Why are we saying that? We don't know what it should be. We think 1% is manageable. But the one thing that we have seen from economies where this has been, where they've been able to really turn the economy around. And I'm not talking here about Singapore or, other countries where it's great. I think we should take the lessons that we can, but our country is very different from those. I'm talking about some of our neighbors, whether we agree with everything that they're doing or not, like Ethiopia, like Ghana, like Rwanda. Ethiopia, of course, being negatively impacted by COVID. If you look at the importance that the tourism sector has had in that industry. In that country, but still, one of the lessons that we can take from them and a lot of these other countries is that consistent improvement, and I think that's where we are falling short. In terms of load shedding, we at least, in the 3-year scenario that we have here, we still have load shedding. Even in a 5-year scenario where we are asked about, giving a view of where we think the economy will go in 5 years. Of course, at the rate at which things are changing, there's a lot of things that we need to take into account. But even if we take that into account, we still have load shedding in the next 3 to 5 years as very much as part of our assumptions. We do hope that we are able to improve our electricity availability and electricity supply, but I don't think we should rely only on Eskom to do that. So I'm going to stop there. I actually went a little bit over the time that I wanted to, but yeah, let's hear what you have to say as well. Any other questions, comments, where you agree, where you disagree. This is probably the one time where I think and hope we will disagree about things. So yeah, let's hear what you say, what you have to say. Have I missed any questions for the team?
No, Lulu, you have answered the questions in the chat. Maybe, Lulu, while we're waiting for some questions, if you look at our recent CEO survey and our CEO's outlook for Africa, There's a fair optimism under our CEOs. What is your view on that, maybe?
Yeah, I think one of the key things that came out, and I'm talking, Andrea, you may shoot me if I'm not allowed to share this as yet. But if you look at where family-owned businesses are going and what we've seen from that survey, it seems that people in your industry, and well, I'm talking family-owned, but I also believe that the private sector or privately owned companies are a little bit more optimistic than their peers in those listed entities. What has come out from that CEO survey, as you rightfully say, Gert, is that there's a strong level of optimism, and it's actually a level of optimism that we haven't seen in quite a few years. So the question was, are we around that, the worst of it? As I said, I believe that we are climbing the hill. We've seen the worst of it, and things will improve from here onward. The rate will differ, and I must say we are slightly more pessimistic in Africa than is the case in the rest of the global economy. Countries like China and the US being very strongly represented in those surveys. And as I said, both of them actually viewing or thinking that they, in China's case, already have recovered, and in the US's case, will recover this year. So it's good news for us that the two largest economies globally are doing well. And I think eventually that will trickle down to the rest of the global economy. So definitely some good news there. Sachin, does this question come from you? Your view on the ZAR US dollar. So as is the case with, let me see if I can get to that slide. As is the case with GDP growth, the gap that we are seeing in terms of the US dollar is also larger than most gaps that I've seen. I'm part of the Economist of the Year survey that we do. I think there's about 30 or so economists that take part in that. And we, as economists, are really bad at forecasting where the rand will be going. But I think the important thing is to understand what those underlying factors are. At the moment, our upside scenario for this year is sitting at 15 Rand 60, yeah, well, it says 15 Rand 70. The baseline around 16 Rand 50, and in the downside scenario around 17 Rand 33. We are updating that, well, from Pierre Cronier, thanks Pierre. We are updating that every month. So we will be updating that next month, and well, which is now in April around the corner. So Pierre, if you're interested in that as well, happy to share with you our house views, and what we also include is the consensus views at this point in time. So yeah, the consensus views, there are some of them that go to a little bit better than 15 Rand 70. There are quite a few that goes worse than 17 Rand 33. But I must say the Rand is one of those things that I think we have a larger influence over every time that there is, political changes or something like that. We see those short-term changes in the Rand, but the longer-term impact of that is by far more influenced by what is happening globally. Do you think Facebook have a bigger role to play in the economy? Andrea, I'm thinking digitalization in general, and it was interesting when we spoke to the banking guys yesterday. So one of the questions that came out was, who do you think, or where do you think digitalization from a banking and payments perspective can play the biggest role? And I think payments came out on top. Oh, family business, sorry. Sorry, now I feel really stupid. But yeah, Facebook, interestingly enough, and digitalization and the role that Facebook's payment options are playing are playing a larger role in the economy. So, and the role, well, to get back to the role of family businesses, absolutely. I think this is family businesses, privately owned businesses. This is a growth trend that we are seeing globally, that these businesses and the businesses that you are in are playing a much more significant role in the economy. I don't think it's a trend that's going to be reversed. Businesses like the ones that you are in are much more nimble, able to respond to change, and that's the one thing that we really need at this point in time. Now I feel really stupid, but yeah, Facebook and the digital economy also playing a much more significant role. And in the case of Facebook, I was specifically talking about payment options that they're looking at. There's another one from Lionel, and this is to all of us. So Gert, Andrea, any one of you, please jump in here if you feel, before I embarrass myself again. Given the general SA skill set and the change in the nature of job, what will the types of jobs post-pandemic, or will the types of jobs post-pandemic not be very different from the pre-pandemic jobs? And will we be able to reskill those that have lost their jobs whilst attempting to deal with those that have not been unemployed for years? How will technology impact this? And particularly for family-owned and small businesses, in particular, if we observe the migration to online shopping and virtual meetings, I think about the impact on all sectors where we premise on physical interaction, etc. Apologies for the long-winded ask. No, that's not a long-winded ask. There's it's an extremely important part of business that we are trying to deal with. My own perspective, as I said, we've gone very digital. There's some movement back to face-to-face as well, that we've seen, and that is a global trend. It's not only South African. So, you know, I think for certain things, people will still want to have that face-to-face interaction. Had anybody else that maybe want to add a comment there?
I think we have come to the hour. So if there are any more questions, we will share an email address where you can put your questions to, and we will ask Lulu to respond to that for you. So Lulu, once again, thank you. Thank you for a very informative session, and also very important in an understandable manner. I like listening to you because at the end, I don't feel so stupid. I think I've learned something today again. Thank you very much for that. And to our guests today, we trust that you found the insight shared or value, and also that it will assist you in your thinking to adapt and to succeed in 2021 and beyond. We also look forward to engage with you during our upcoming webinars. And please don't hesitate to contact Session. Session is going to post his email address in the chat. So please take it, and you are welcome to contact him for any questions regarding today's webinar, or if you would like to get in touch with us regarding the upcoming webinars or assistance to register for those webinars. This brings us to the end. Stay safe, and may you all have a wonderful day, weekend ahead, and goodbye.
Thank you very much, everyone.